To get started in the exercises for Chapter 3, Exercise 3.1 is just asking you to set up T accounts so that you understand which side of the account has the balance. So we've got cash, we have accounts payable, we have equipment, and James Wilson Capital. All right, back to cash. First we have to identify what type of account it is, and cash is an asset. An asset has a normal balance on the left side, on the debit side, and so the $19,000 would be on the left-hand side of the cash account. Let's see, the cheat sheet that you received in the mail or that you came and picked up gives you a little bit of a guide to help you memorize which side is the increase side of each T account. Okay, and next, accounts payable is a liability account. Let's just review the formula. Assets equals liabilities plus capital. Whoops. So if assets increase on the left-hand side, liabilities and capital need to increase on the right-hand side because they are on opposite sides of the formula. So accounts payable would increase on the right-hand side, the credit side, and the balance of the accounts payable account is $24,200. Next is equipment, is an asset. Left-hand side of the formula, increases on the left-hand side. And James Wilson Capital is capital account, increases on the right-hand side, and that was $40,800. That's the only thing you're doing on this first little exercise, is to set up the accounts in T's and put the balance on the right side of the T. Okay, next you start doing transactions one at a time, just to kind of get warmed up and get good at doing transactions. So we just need to look at each transaction and figure out the two accounts that are involved and post on the correct side of the T account. Okay, so exercise 3.2. I'll just do a couple of them. So number 1 says Denise invested $90,000 cash in the business. There's always going to be at least 2 accounts affected. So in your workbook you have 2 T's that go with each item. I'm just looking again. And we're not going to do each one by one. That's what you'll do in problem 1 and problem 2. So you're going to set up the accounts that need to be affected. So let me back up a second. Okay, and go back to problem number 1. Denise invested $90,000 cash in the business, so the 2 accounts affected are cash and Denise Carswell Capital. So we increase $90,000 on the left-hand side of cash and $90,000 on the right-hand side of the capital account. Next, we paid $30,000 cash for equipment. So we paid $30,000, so that comes on the decrease side of the cash account. And our matching is our equipment. Which we increase that asset. Next, we performed services for cash amounting to $9,000. Performed service would be fees income. That's always the account we use for collecting our revenue. So we collect our revenue on the same side as our capital. So that would be $9,000. And we performed service for cash. So we increase our cash $9,000. Okay, you should be able to continue on with exercise 3.2.